The stock market plunged lower this week. The question many are asking, are retirement savers in trouble? We're going to explore some possibilities for hope, so stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. I have some encouraging information I want to share about the stock market today and for those who are building a retirement nest egg. Now, the S&P 500 was down 4.5%. And you might say, well, what's encouraging about that? So we're going to take a look at that. Now, on this channel here, we not only talk about investing for retirement, we also talk about Social Security, when to retire, how much to save for retire, and much more. Now, there were some signs of hope just 3 weeks ago as the stock market was recovering from the June lows. But after the Fed chairman's speech just a couple of weeks ago, the stock market has seen more pain as was predicted by the Fed chairman. Here's a headline. Google CEO tells employees not to equate fun with money in heated all-hands meeting. This headline is an example when companies start to lose money and they clamp down on their employees, conversations become heated. Here's another headline. FedEx CEO says he expects the economy to enter a worldwide recession. And the next day, we see this headline. FedEx is raising its shipping prices to battle slower growth. They're not exactly playing along with the idea that we need lower inflation. Now, before we get into some of the possibilities for hope, I just wanted to mention this. Over the last couple of weeks, we've been talking about some of the best growth ETF funds and dividend funds that a person can invest in. So this time, while the market is dropping, you want to be preparing what you're going to do when the market turns around. So I'm just sharing some ideas that I might be interested in and I thought maybe you might want to consider also. Now, where's the stock market at right now? We're looking at the NASDAQ 100 QQQ. We're looking at a weekly chart here. Now, from the highs to where we're at right now, we're down over 30% in the NASDAQ 100. Now, there's other stocks in the NASDAQ 100 that are down much greater than that. Someone's down as much as maybe 60, 70%. Now, a few weeks ago, there was a lot of hope. We had a nice move up, but then once Fed chairman's speech came in and said there's going to be a lot of pain, raised interest rates, the market has been dropping. We're looking at the Dow Jones Industrials on a weekly chart, and from highs to low, it hit the 20% mark. It's dropped 20% from the highs. Let me know in the comments, do you think the stock market is going much lower, or are we going to hold these lows where we're at right now? And we're going to look at the first sign of hope here on the Dow Jones Industrials here. Now, I can't guarantee anything, but this is a good sign what we're looking at here right now. The Dow Jones Industrials this week went lower than these June lows. So we tested these June lows, and one thing that's very positive on this, even though we were down, the volume was lower than the volume was back in June. This is one sign we'd like to see when the market is dropping and going below the previous lows. Now, could the markets drop Monday morning when the markets open again? They certainly could. But if we don't have the volume, buyers may end up stepping back in and holding this from going any lower. Now, here's another sign of possibility of hope. We're looking at the S&P 500 here in the middle. We're going to scroll this up and we're going to look at the chart for the number of stocks above the 50-day moving average. And you can see back in June, this went below 5%. So there was maybe just 2 or 3% of the stocks above the 50-day moving average. And this was at the lows in June, as you can see here at the bottom of the chart. Now, where are we at right now? We're right at 5% of the stocks above the 50-day moving average as we're testing these lows back in June. Now, if we look on the left bottom side of the chart, again, we have the S&P 500 down here at the bottom, and this was the pandemic. The market cratered during the pandemic, and you can also see the number of stocks above the 50-day moving average also cratered. So typically when we get down to a point where there's very few stocks above the 50-day moving average, that's a positive sign. What that's telling us, when we reach a low level of stocks above the 50-day moving average, we are now getting into an oversold position. A contrary indicator I like also is the fear and greed index. When we get too much fear in the markets, all the sellers usually come in that are going to sell at that time, and the market can turn around. And you can see where we're at on the extreme fear here with number 24 here. Interesting enough, a year ago, we had extreme fear of 24 also. Another interesting chart, this is the NASDAQ 100 QQQ. We looked at it a moment ago. These are a number of stocks above the 200-day moving average. Right now, we sit at about 12% of the stocks above the 200-day moving average. Back in June, when we hit the lows, we were down around 5% stocks above the 200-day moving average. Now we're looking at the NASDAQ 100 QQQ stocks above the 50-day moving average. We can see down here it's down to about 2.5% of the stocks above the 50-day moving average. And you can see back in June, it was around 6% or so. And you can see when we reach these extremes, the QQQ has a tendency to turn back to the upside. Now, there's no guarantees we're at the lows right now, but those are some indicators I like to use to help me determine where we're at in this downturn. Now, what would cause us to go much lower? So far, the market has reacted to the downside due to the increase in inflation and also the increase in the interest rates. The next real test we might see is if stocks start to warn that their earnings are going to be lower than projected. If that happens, we could see more downside selling. We're looking at the S&P 500 on a weekly chart. Now, what would be a worst case scenario if we continue to sell down? The S&P 500 could work itself down to this blue line, which is at the top of the market prior to the pandemic. That's a possibility. Now, what I think is more of a possibility for right now is that we possibly come back down a little bit lower from where we're at right now, test these lows of June, and then pop back up. We could get a couple of months out of this next pop. We don't know. Nobody can predict 2 months or more what's going to happen at this time. But if the S&P 500 does get down to these lows, we're going to get some good information that will help us determine what's going on. We're quickly approaching an oversold situation in the stock market, in the S&P 500, the NASDAQ, and many stocks out there. If we do hold these lows here, we are looking at a possibility of a bounce here. Of course, no one knows right yet. We'll just have to monitor the situation. We have to be patient and monitor the situation closely. So I hope this information here today was useful. If you have any questions, leave a comment. I want to thank you for watching our video here about the stock market plunging and our retirement investors in trouble.